FM, Debbie, Harry, and Blondie there. We're at 8:42:18 here before 9. It's up to 55 degrees. Probably bump our noses on 80 this afternoon. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And we do it every morning with Philip Statler from Statler Financial Services in downtown Sebring. And boy, it turned into another relative party day yesterday on Wall Street. Philip, good morning. How you doing today?
Good morning, Dave. Yes, it was a good day. Lots of green ink, and our hopes are that we can see the same thing today and tomorrow and Friday.
Yeah, a few days of this, and we might actually give back what we lost on Monday morning. I don't think we're past that. I don't think we've recovered, at least on the Dow, quite yet all that we lost on Monday. But 307 points up yesterday on the Dow, 56 points up on the Standard & Poor's, 288 up on the NASDAQ. I didn't get a chance to check the Russell 2000, but given the spike they got yesterday, I suspect that they probably also gained as well, didn't they?
Yeah, they did. They're the lesser of the group. They're at 0.4%, about $11 yesterday.
Well, they overachieved the group yesterday, so I suppose that's probably an act of balance in the process. And that was before the big news of the day yesterday came out, because all eyes were on NVIDIA. When we were talking before we went on the air, NVIDIA is such a market mover normally that I almost consider them a macro event more than I do an earnings event. But as usual, they kicked butt. They set a new record. They skyrocketed on profits and on sales, and everything looked absolutely hunky-dory. But it's kind of funny. A few years ago, I was making fun of Apple unless Apple ended up absolutely slaying the estimates. They got traded down. Looks like NVIDIA is kind of getting into that pantheon now, isn't it?
Well, they do. They have to, they have to really surprise. And I guess when you beat earnings, it's not really a surprise for NVIDIA right now. They beat on earnings by about 9 cents a share, came in at $1.62. And revenue was substantially above expectations, almost, not quite, but almost $2 billion more in revenue than what that was expected. So I'm thinking, okay, that's pretty good. Data center revenue came in about $1.5 billion more than expected. So net income almost doubled. I don't see any bad news anywhere in the report, but they're not getting rewarded largely for outperforming. And they're up about 0.8% this morning. So obviously they're doing well, but just not as much as you would think with that kind of a beat.
Like I said, we've kind of gotten spoiled on the notion of these high tech, whoever the high flyer of the moment is in the tech business. If they don't just absolutely slay their estimates and sometimes double them, we just say, okay, that was expected. But it does give a little additional confidence to the marketplace, at the very least, I got to believe, with the high-tech stocks, because so many of them have ended up getting just kicked where it hurts over and over and over again. The fact that NVIDIA is still selling stuff right and left, and that's even in the face of all the new competitors for artificial intelligence chips, like the big news that we had about AMD selling a pile of them to the Facebook people the other day. Even with new tigers in the jungle, NVIDIA still appears to be the gold standard on those high-end processors, don't they?
They do. Yes, they do. So, I mean, I think that, they've got a long life ahead of them. At least it looks that way right now.
At least we can hope they do, because a whole lot of people have money in it right now. I didn't see a capitalization figure, but with the kind of numbers that I saw come out yesterday afternoon when they reported, I figured, well, we're heading for $6 trillion in market cap now. Well, it might be a little while given the investors' response, right?
Yeah, could be. Could be.
It could be down the line. Bunch of other things are going on in the marketplace today. First-time unemployment claims out this morning. We're trending downward again. 212,000. That by the normal sifting and winnowing process in the unemployment market is an actually abnormally low first-time unemployment claim number. The employment market still looks to be, well, not as healthy as we wish it was, but at the very least holding steady. I think I'd call that a fair characterization, wouldn't you?
I do. I think, yes, they are. And the initial jobless claims are basically in line with what expected was versus what it was the week before. Nothing drastic there, Dave, as we kind of look at those numbers.
Yeah, the 4 week average is pretty much on target, a little bit above what they expected the 4 week average to be. But again, we're averaging across the last 4 weeks 220,000 people a week looking for new work and filing for unemployment. And, the old dictum and rule of thumb, about 250,000 people are normally shifting and winnowing every week in a normally functioning economy. So that old phrase that we've been using over and over again, the no hire, no fire economy, there are layoffs, but for the most part, they're getting picked off before they hit the unemployment rolls, and we're kind of basically holding steady at about 4.4% unemployment.
Yeah, yeah. So I mean, I think from an employment standpoint, I think it's kind of really good that we're leveling off. We're not going one way or the other right now, and so I think people that have a job are holding on to it longer because of the uncertainty of trying to find a new one.
Understood, yeah. Other tidbits out this morning before we get the reports out there. Given the travails of software stocks, this one caught my eye when it came across my ticker. Ford has announced they're going to recall. I think the number is 4.3 million vehicles, and then you get a drum roll. Why are they doing it? Software issues. Some chip maker is probably going to end up hitting the tank as far as what prompted that to happen.
Yeah, it's maybe they can blame it on AI.
That's it. We'll blame it on artificial intelligence. And that's the biggest ticker I've got for the moment, my fear and greed index. And I've been watching it carefully because when we go down 800 points, the fear and greed index with the amateur investor always moves into fear. Over the last couple of days, we've gone back into neutral territory. So the pros are still touchy about software, but it doesn't take much to be able to make the amateurs feel optimistic again. So it moved up considerably this morning. Some of it might have been NVIDIA. Some of it might have been some of the other reports that came out. I've always loved the slogan with a name like Smuckers, it has to be good. Are they selling their jellies all right?
They are, Dave. They had better than expected third quarter results by quite a bit. I mean, it came out at $2.38 a share versus the expected 227. So I think that's pretty good. Now, revenue was, you say, basically in line with expectations, a tad above, but not enough to give them any oomph going up. But the earnings did. They're trading up 6.7% this morning. So, it's going to be a sweet day for them right now.
It sounds like it. Again, you get to a traditional company, you beat by a little, and they really reward you. It's only in high tech where you have to kill things before you get a big bump.
This is true. This is true. Another big name in business is a company called Salesforce. And if you're in business, you've heard of them. They are a big CRM, customer relationship management software. They just a huge deal in the business world. And they're down this morning. They're kind of having they're kind of in this lull right now. Full year revenue picture is not really what everybody thought it was going to be. I mean, they beat on the quarter. Don't get me wrong. They had a good quarter. They beat substantially, $3.81 versus 3.04. Revenue was slightly above expectations. Revenue grew by 12%. So, everything looks good, but it's kind of like NVIDIA. You expect a company like this looking forward, and that's the thing I think right now is that, looking forward, trying to gain more market share is a little bit of an issue for them. They did come out and say they're going to do a $50 billion buyback. They just announced that. So hopefully that will help their shares a little bit. But right now, they're trading down a little over 1.6%.
What do you think that is? Is it a maturing industry, or are they just getting that software sector case of the flu that's happening to them?
I think it's somewhat the sector they're in is, there's only so many customers, right? And
Hmm.
Salesforce is a premium product. And to make it work right and well, you almost have to hire a consultant to come in and set it up for you. So it's not cheap. And so I think that keeps smaller, maybe even mid-sized businesses out of Salesforce because they don't want to pay that bill. But I think that's probably part of it.
I know it's a glamour. I know it's a relatively glamour company in the business software sector. But I know they've had a couple, three hard quarters, and it confuses me.
Yeah, they have. They've had some issues and at some point it gets harder and harder to sell.
Oh yeah. What else we got this morning?
Well, let's see what we can come up with. Shake Shack reported they beat. Let's see. It looks like they beat by a penny a share. But that penny did it. Well, not really. The penny probably not so much. Their revenue did it. Their revenue was like $32 million more than expected. So it's got them trading up 8% this morning. And the last one
Yeah.
I will go with is a company called Warby Parker, which you may not recognize that name, but they're an eyeglass company, kind of a
Hmm.
premium eyeglass company. And so they're trading down this morning. Their EBITDA was about $4 million less than expected, and their overall revenue was about 1 million less than expected. So it's got them trading down about 1.25%, which is not bad, Dave, because my report said they were down 8% earlier this morning.
Ouch. I see them marketing a lot on the internet. I didn't know what price point they did because, well, since I had cataract surgery, I'm not in the market for eyeglasses. But, they're a well-known name for people that have actually shopped for spectacles. Resetting the table, it was an update yesterday across all the major indexes, 45 minutes before we opened this morning. Are we looking at good news again?
It looks like it, Dave. It looks like got green ink. The Dow's up 1/4 of a point. The S&P 500 is up 16/100ths. Nasdaq's kind of lagging right now. It's only up a little less than 1/10 of a percent. The Russell 2000 is up almost a quarter. On the other side, however, Dave, we got a lot of red ink on the commodity side. Silver's down 4%, back below 90 to $87.38 an ounce. Gold down 0.75%, still over 5,000 at $5,187 an ounce. And crude oil, you'll like this one, Dave, down 1.5 to $64.41 a barrel.
Yeah, especially since I don't know of any international event that would have changed it to go down that far. Looking across the pond, the Asian Rim market had a little bit of a correction on the mainland Chinese markets yesterday. They were off by a little bit. For the most part, the rest of the Asian Rim markets were up, except for Hong Kong that had a really bad day. They were down a full 1.5%. Over on the European community, they're mixed, but by and large, fractionally up. The average European index about 0.2% to the green side, 45 or halfway through their trading day. Getting my retirement together takes some risk management, especially as I get closer to making the decision. How do I find you to get my risk out of my retirement plans, sir?
It's simple, Dave. They can give us a call at 863-382-0037. They can actually even go to our website at statlerfinancial.com and click a link there, and they can pick their own time that they want to talk with us. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
Everybody around here always has to change underwear when I start talking about my decision to retire soon. I scare them here. I'll catch you tomorrow, my friend. I do appreciate it.
All right, take care.
Thanks. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Folks, again, I want to thank you for joining us today. Week's almost over. One more day. Come back and join us as we close out the week tomorrow. Until then, have a great day. Bye now.